Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 4th of January 2016 and we're addressing the issue of China suspending share trading due to its near 7% fall. Trading on China's stock markets have been suspended after the market dramatically plunged and triggered a new circuit breaker system introduced in early December meant to limit volatility. Trading had been halted earlier in the day for 15 minutes after the stock market fell by 5%. But shares continued to fall, leading regulators to end trading early. The Shanghai Composite index closed down 6.9%. One factor behind the stock market fall was the Caixin Markit Purchasing Managers Index, or PMI, slipping to 48.2 in December, marking the 10th consecutive month of shrinking factory activity in the sector. The PMI survey, which focuses more on small and medium-sized businesses, came after an official survey last Friday, which looked at larger companies, suggesting a fifth month of shrinking factory activity. This additional weak factory data has fanned fears about the health of the world's second biggest economy. Other markets have also fallen as a result. Japan's Nikkei 225 index closed 3.1% lower. Australia's S&P ASX 200 index closed down 0.5%, while South Korea's Kospi index finished down 2.2%. At the time of this video, the UK FTSE index is down 2.5%, the Paris CAC index is down 2.4%, and the German DAX index is down 4.5%. The US market is yet to open, and the Dow Jones is anticipated to fall by nearly 2% at the start. World oil prices edged higher as Brent crude gained 3%, rising as high as $38.40 a barrel, after Saudi Arabia's execution of a prominent Shia Muslim cleric ignited tensions in the region, raising concerns among investors about oil supplies, a subject we've addressed in our article section on our website at www.illuminatisilver.com. Brenda Kelly, an analyst at CMC, said, quote, "If today's activity in Chinese equity markets is an indication of the year ahead, then we are likely set for a bumpy 2016, unquote. London's top faller today was mining giant Anglo American, which tanked by almost 9% in value on demand fears by leading commodity consumer China. Glencoe and Antofagasta shed about 7% and 5% respectively. Interestingly, China has also today cut the yuan's value, making it weaker than 6.5 against the greenback for the first time in more than 4.5 years, as pressure on the currency mounts from the country's growth slowdown. So what are we to make from all this? Well, certainly tensions between Saudi Arabia and Iran is likely to help raise oil prices, if only short term, and create market instability. Equally worrying at present is the continued slowdown in the Chinese economy, with officials already having cut their growth target to 7% per annum last year, with many believing this figure to be falsely inflated, with the true rate standing at 3 to 4%. And now even weaker data coming out suggests that commodities may be even harder hit in coming months due to lack of demand. All those pundits quoting the imminent demise of the dollar as a result of a resurgent Chinese yuan may very well be surprised by the strength that we expect the dollar to gain as a result of China's continuing devaluation and any flight out of stocks and shares into dollar-denominated assets. Both gold and silver rose initially and are standing up 1%, with gold at $1,072 and silver at $13.96 per ounce. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website regularly at www.illuminatisilver.com. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we're not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.